An unprecedented and relatively unknown wave of change is happening in the global power sector today. This change is happening at a pace that nobody ever predicted, and its global impacts have been mostly under the radar. I'm Andy Kinsella. I'm Group Chief Executive at Mainstream Renewable Power. I want to share with you the facts on why the most savvy investors globally are divesting of fossil fuels, and why the fossil fuel industry in all its forms will decline more rapidly than people think as investors take flight as a result of the medium and long-term risks to their investment returns. Continue watching and you'll see. Let's start with coal. Global investment in coal has plummeted by 80% in the last decade alone. For the first time ever, more coal-fired stations are being shut down around the world than are being opened. In 2008, Peabody Energy was the largest privately owned coal company in the world, a blue-chip corporation with 125 years of success. The same year, Fortune magazine called it one of America's most admired companies. Just 8 years later, it had filed for Chapter 11 bankruptcy. This was the beginning of the end of coal. Analysis by the respected UK think tank, the Carbon Tracker, shows that today, 42% of the world's coal generation fleet is loss-making, predicted to rise to 72% by 2040. They also say that it's cheaper to replace a third of the world's operating coal fleet with new renewable energy today, rising to 96% in a decade. And they estimate $267 billion worth of investments in coal assets could be stranded by 2035. Now let's briefly look at the other side of the coin. Where is the smart money going? In 2018, global capital investment in renewable energy was $305 billion. When you combine the capital investment in coal, gas, oil and nuclear, it comes to $158 billion for the same period, half the renewable energy investment figure. In 2008, 7% of new capital investment globally in power generation was renewable. Today it's 66%. 9 out of 10 countries on the planet now have renewable energy targets, almost 4 times what it was 10 years ago. A journalist asked me recently, what has changed in the industry since our company Mainstream was founded in 2008? My response was, what's changed is the pace of change. It's getting faster and faster. The linear growth of renewables will soon reach a tipping point and become exponential. In 2007, the International Energy Agency forecast that there would be 180 gigawatts of renewables globally by 2024. In 2014, there were 900 gigawatts of wind and solar globally, 5 times the IEA prediction in half the time. What's driving this? Is it solely environmental concerns? To misquote Bill Clinton, it's the economics, stupid. According to the latest analysis from Lazard, renewable energy is now cheaper than coal, gas and nuclear power on a unit-by-unit basis. This graph from Lazard shows the levelized cost of energy, or the average cost of producing a unit of electricity over the lifetime of a generating asset. On one side, the levelized cost of a unit of wind power is between $29 and $56. Solar PV sits from $36 to $44. On the other side, gas peaking plant starts at $152 up to $206. Gas combined cycle starts at $41 and up to $74. Nuclear is from $112 to $189, and coal starts at $60 per unit and up to $143. On top of that, the International Monetary Fund says the global fossil fuel industry received $5.2 trillion in government supports in 2017. That's the equivalent of 6.4% of global gross domestic output. So based on pure economics alone, it's clear to see why twice as much capital investment is going into wind and solar power globally compared to coal, oil, gas and nuclear combined. During the 80s, the oil and gas majors took 7 of the top 10 places in Standard & Poor's 500. Today there is only 1 in the top 10. In the past 5 years, fossil fuel stocks have underperformed against all other sectors globally. Instead of bolstering portfolio returns, these energy stocks have cost investors billions of dollars over the past 5 years. On the Standard & Poor's index, they now hold a niche 5% presence. And since 2015, 35% has been wiped off their value. The fossil fuel industry is predicted to see between $1 trillion and $4 trillion of investment assets stranded between now and 2035. In another blow to the sector, the London Stock Exchange officially reclassified oil and gas as non-renewable energy, a move which caused consternation in the oil and gas community. What used to be termed on the stock exchange alternative energy is now reclassified as renewable energy. Renewable energy is now truly mainstream. This is why we called our company Mainstream when we founded it in 2008. The game is up for fossil fuel companies that do not support global efforts to avoid climate change catastrophe by urgently phasing out their fossil fuel businesses and transforming to a low carbon world. The investment community recognises that these companies will be increasingly risky investments. The fossil fuel industry in all its forms will decline more rapidly than people think, as investors take flight because of the medium and long-term risk to their investment returns. Remember, the steam locomotive saw the demise of the canals. Automobiles saw the demise of the equine industry. And the cell phone saw the demise of the fixed landline. The renewables industry will see the demise of the fossil fuel industry, and sooner than you think. Watch out for my next vlog when I will tell you how we at Mainstream are homing in on the final hurdle of producing firm power 24 hours a day, 7 days a week from wind, solar and battery storage assets.